All righty, good afternoon, everybody. Welcome to Talking Real Estate with Champions Real Estate Team here at Berkshire Hathaway Home Services Ambassador Real Estate Company. My name is Mark Wehner, the second team leader here. We jump on and talk about real estate every our Talking Real Estate segment every Wednesday, depending on when we can get on here throughout the day. So we just came from a staging appointment, so I got a new listing coming up here probably the next week or so. Getting that house ready to rock and roll. So over off of about 108th and Q, it's an awesome house, updated. It's a sweet house, so it's a ranch house. It'll be a good one. So I'll get more details when I'm able to get you more details legally and all that fun stuff. So, but yeah, so what's going on in the real estate market? We always start out with a quick tip. I know last week I was running solo on the video, so I know I touched on first time or home buyer assistance programs that have come out over the last week, and then when those things kind of taken effect. So I got the myth, the man, the legend, Russ Williams with Williams Mortgage. He's got obviously more of the details on kind of what's available out there. And that's just things I hear when I'm talking to home buyers. Hey, we're trying to save up for a down payment, or we're not quite ready to get over that hurdle yet, and I'm like, well, have you talked with the lender and those type of things? Well, we don't know if we're ready at that point. And so it's those things. It's very important, I think, to get a team, I use all the sports analogies a lot. Get a coaching staff around you, a lender, a great real estate agent from here at Champions Real Estate Team, home inspectors, all those different, coaches that you can use in that process. So then we can now, see what everybody's playbook is. Because Russ is going to have a different playbook from a lending standpoint. I'm going to have a different playbook from a real estate purchasing contracts negotiation standpoint, and know what plays are in your playbook. And I think that's a huge thing, especially, here in the middle of February before it really, we're kind of in that, what do they call the false spring, and then we're going to go through another second winter, and then we're going to go, for the weather seasons. And so a lot of buyers are out there, and I'll touch on that in the market segment because obviously I can keep talking here. But let's jump in with Russ here and kind of see what we got out there,
Yeah.
different programs. I know there's many different programs. So I mean, Russ, I guess what's kind of coming on the, in this buying season of what's out there that some buyers can look forward to, or throw their hat in a ring. And I know there's different things, but I guess I'll let you run with it from here. So
Yeah, usually in the third month of the year, a popular one that we hear about is the homeownership set-aside program that's administered through the Federal Home Loan Bank of Topeka, Kansas. And basically, if a bank or credit union happens to have a partnership with Federal Home Loan Bank of Topeka, Kansas, the depth of their relationship will determine how much grant money they have available. And these are really nice grants, Mark. They can be up to $15,000 per household. That program starts to open up on May 2nd. Now, one of the caveats is that they look at household income. So if the household income is at or below 80% of area median income, a first-time home buyer could use that $15,000 grant to help subsidize the down payment or closing costs on the purchase of their home. Again, uh, because it's based upon the depth of the relationship with the financial institution and the Federal Home Loan Bank, some banks might only have one or two a month, maybe. Others might have more. So, in the event that your preferred bank doesn't have funds available in the month of March or April, you might want to call another bank to see if they may have some funds available. That's a common one we hear that people get excited about. Another common one is obviously the state bond programs, whether it be NIFA, which is Nebraska Investment Finance Authority in Nebraska, or Iowa, the Iowa Finance Authority in Iowa. They have not only interest rate subsidy, but down payment subsidies as well. And in the case of Nebraska, with the NIFA program, they have home buyers assistance that has income limits that might be just a little bit over area median income. And they have other assistance programs that can be as high as household income of up to $170,000 and change. So those are very nice. There are still other programs out there that aren't necessarily applied to first-time home buyers or are not necessarily income-based that are available. A popular one is called Chenoa, Chenoa, for those folks that want to Google it. Not everybody has access to it, but it is something that can be tagged on the back of an FHA loan. We also see some subsidies out there that probably will run at least to the end of the year for folks whose income for the borrower is 50% of area median income, and that's on the borrower, not the household. The important part about that, Mark, is let's assume that you and your wife each make 50% of area median income individually, and between the two of you, you make 100% of area median income. That 100% of area median income for household income might exclude you from being able to qualify for some programs, but if only one of you were on this loan, your income as the borrower, as the sole borrower, you could take advantage of that subsidy. So it's important to know that there are options out there, and make sure you ask questions. And in the event that your preferred lender doesn't have those available, let me know. I'll be happy to get you directed. But there's a lot of programs out there, and this is the time of year that those programs are getting refunded.
Yeah, and I mean, I think that's the biggest takeaway from our quick tip here is just that, know what questions to ask, and know that there are, other opportunities out there than just trying to save pinch your pennies and put them in the savings account to do that. You have some potential assistance out there through grants or other programs out there that can help you get your foot in the door. And then ultimately, once you get your foot in the door, that's the biggest thing, is starting to build that equity, pay down your mortgage, all that kind of fun stuff. Whether you're house hacking, you have a roommate live with you, that's paying some of your mortgage, and that's helping you. So there's a lot of different things you can do. And I think that's just one of the things I'm very passionate about, is helping those get into the housing industry, get into the, wealth generation side of it, not just looking at it as a roof over your head, but how can you use that tool, to help your financial freedom, down the road, and how can you make that play. And I don't think a lot of people think outside the box of that. My mom and I, funny enough, as we were coming home from the staging appointment, because it was my parents' friends that their house is going to be listed. And we were just talking about that, just the financial literacy, and even just in the home buying sector, or even just in the financial, stocks and bonds and that kind of stuff. It's just having having a coaching staff around you that is going to help you get to that next level, whatever your goals are, whether that's time freedom, whether that's, income, whatever your goals are. Surround yourself with a coaching staff that's going to help you get there, and have different playbooks, or those coaching staffs, that coach knows another coach that, hey, here's a financial advisor that's really good, that does that type of planning, and and those type of things that you can surround yourself with out there, and ask questions. And I think there's a lot of avenues out there, and I think, just one avenue, I've been listening to a lot of podcasts. I think that's helped me educate myself. And then obviously you have all the chat GPTs and all the AI things that you can throw questions out there, which I have. And it's like, you're surprised by the response. You're like, oh my goodness. And then you can go do more research, on your own, of, does that make sense, or does that make sense? So it's, I guess we're kind of getting off on a little tangent here, but what I'm getting at is that there's a very important aspect of, when people think they're just going to go buy a home, they're just going to call in a real estate agent, and then let's go out and look at houses. What does that house mean to you, from an investment standpoint, from a wealth standpoint, from a, just raising a family, all that kind of stuff. So there's many different avenues of looking at it. And I've had clients of mine go, Mark, I've never looked at a house in this manner. I've never looked at it as an investment vehicle. I've always looked at it as a roof over my head, that, I spend time with my family, and I go out and mow the grass, and I shovel snow, and it's not, you don't look at it as it's a storage of energy, which is the equity that you have in that house. How can you put that energy to use, and things of that sort. So anyways, I'll get off my little soapbox here, but yeah, I love chatting about this stuff. I can get down a whole rabbit hole. We try to keep these videos short. So sometimes Russ just got to give me the nod and say, hey, wrap it up, and stop yapping over here. So as we look at the inventory, look at the numbers. So those that are number junkies like myself. So we had 491 new listings go live as of, I think, about 1 o'clock this afternoon over the last 7 days. And we had 446 new contracts written, 263 sold homes. So the biggest takeaway here is last week we had 561 new listings go live. We had 490. So we had about another, 70 listings less than we had last week. But we also went up from, another 20 new contracts. So we're seeing a lot more buyer activity. Like I said, I got a couple listings coming up. So I always do my research. I do the scouting report of what's going on in the market. What's the playing field look like? And I was talking to about 2 agents this morning that have houses that are under contract in the last 7 days in the subdivision that our new listing is going to go up. And it was interesting that I found out just from them and what I've been seeing, but they had about 15, 20 showings on the house, and over the weekend, and they got one contract, but they all said that one contract was solid, and it was, a great contract. But we're seeing a lot of buyer activity to maybe, I think, see what's going out there. The weather's nice. Hey, hey, mom, dad, hey, spouse, should we go look at houses? Or do you think we should buy a house this year? Let's go see what's out there. And then let's call an agent, or those type of things. Or then let's talk to a lender. Let's go to the open houses and kind of, see what's out there in the marketplace. And the thing is from a buyer's perspective, when those buyers start getting serious and they get all their ducks in a row, there's going to be a lot more than 450 houses going off the market. And, and if we only got 500, 550 coming on the market each week, it's going to be a 1-to-1 ratio. And we're going to see more multiple offers, and so that's why what I'm saying as far as the activity goes. And from a seller's perspective, that's an opportune time. You're seeing more buyers come in the marketplace. But if you're also a buyer or a seller that's got to turn around and buy, getting your house on the market now before that you get the, a big push. Because like I said, we're in our, fall spring here, I believe. And then, in March, we're probably going to potentially get some blizzards or stuff like that. They'll probably plan right over spring break time for the kids, and all that good stuff. And then all of a sudden it'll slow down. But those sellers are going to get the house on the market. Maybe some buyers are coming back. And we saw that was it last year, the year before, we had this really cold temperatures and a lot of snow. And we literally saw the market dip a little bit, atypical to what the market usually does in that time frame just because of the weather. So it's interesting how you can kind of plan those things. Again, it's working with agents and lenders that have that playbook and have played a game in those seasons to know how to fluctuate. And one of the other agents in that I talked to know very well, and another agent that wrote that contract, they wrote the contract like how I've done before it even went on the market. They had it as a no-show listing, and that agent wrote the contract without even seeing it contingent upon that. So there's agents that are the agents that have been playing the game a while, have a lot of plays in their playbook, and that's what we do here at Champions is make sure we got a lot of plays in our playbook to get you into that house in regards to that. So taking a look at the 30,000-foot view, not much has changed on this one from the previous week. I think we were at 33.47 last week or 33.97, I think it was. So we're down 50. So that goes into par what we saw on our graph just before. 1840, 1860, or 865 listings in Douglas and Sarpy County. So that's not a lot. I think what this last year, Omaha metro area just went over 1 million people in population. So we have less than 875 homes on the market for those people to look at. Not a lot, in regards to, and that's all price points, in regards to that. So 975 new construction, 5 months supply of inventory. And that was at 6 months supply of inventory last week. So it's dropped, obviously. And you saw that, just simple numbers. And an average sold price there, not too much has changed on that regards. But I guess now we can jump. I know we talked a little bit already with Russ, but let's jump back in with like what rates are doing.
Yeah.
Excuse me on that. But
we're not sitting too far off of 3-year lows, Mark.
Yeah, I saw that.
Yeah, granted, we're not where we were 4 or 5 years ago, and those days probably aren't coming back. If you've got a 2.5% rate, those rates aren't coming back. But I will tell you that home prices are continuing to rise. But having said that, with rates being near 3-year lows, we are seeing some increase in activity. We're seeing more people come off the sidelines to want to buy homes. And what that normally means when you think about it from the perspective of supply and demand, when you have more demand and supply remains somewhat stable, as Mark has been pointing out here, that can start to put pressure on home prices, either pushing home prices higher or maybe having more difficulty getting contingencies through. Sometimes it's more difficult to get the seller to pay some of your cost or get home inspections, those sorts of things. But mortgage rates have been holding pretty steady for about 3 weeks now, as far as them being low. Now, we do have, of course, after the shutdown, second shutdown again, we have some delayed data coming out. Friday, we have December's personal consumption expenditures report, which is the Federal Reserve Bank's favorite measure of inflation. Now, I've been critical of the Fed that they have been maybe slow to act. Maybe they're right. Maybe I don't know what I'm talking about. But in the event that we do see that PCE report come out very meek and inflation is continuing to improve, that could start to change the tune that the Fed speakers on the circuit, Fed governors, Fed chairman, and what that could do is that could encourage more purchasing of bonds, which is a very favorable thing for mortgage rates. Is it a guarantee? No. We live in a crazy world, but to keep in mind, if rates come down, we could see more activity, more people coming off the woodwork, coming off the sidelines, wanting to buy homes. So if you're wanting to buy a home, we encourage you to get out there now. Rates are good. They're still fine. If the rates happen to come down after you bought the house, we can refinance it, but we don't want you to have to pay more for the home 6 months from now if rates come down.
Yeah. No, like I said, I think the biggest takeaway from this video or our chat here today is just kind of getting a coaching staff, surrounding you that like, and trust, and seeing what's in their playbook. I think that's evident of, when you're interviewing agents, when you're interviewing loan officers, home inspectors. Hey, what's in your playbook? How are you going to get me? How are you going to get me in that house, or how are you going to help sell my house? And those are the things that are, I feel, important in that aspect of it, of getting you into a house and helping you, think outside the box of just it being a house where you're going to put your head on the pillow, and how can you utilize that and grow that and maybe keep that as an investment property later, or if you're thinking of selling, or should you keep that as an investment property? And those are things that we go over with you. And, I'll go over all the sun. It's not all sunshine and rainbows being a property owner and a real estate investor, but it's definitely has its perks in that side. So those are all things we go over. So awesome. We like to keep these videos short, so I'll stop yapping here. But if you have any questions, reach out to us 672-7670 or 490-80 or 8930. That's the last 290-8936. Sorry. But awesome. We will see everybody next week, and take care.